Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Bitcoin holding the range as it bangs its head up against some daily resistance levels. That is 45 at this 40, basically 44K region. Do we hold the line here, or do we start to make our way down? That is the question as we come between the 886 and the 786 of this diagonal pitch fan that we've had price in for quite some time, since January. Let's go ahead and look back at the liquidity of high block. What is high block, you say? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. So essentially yesterday, here on the 1 minute time frame, switching over to max liquidity, we had an imbalance to the tune of $28 billion of long liquidity waiting to be grabbed to the downside. Meanwhile, engineering some to the upside as well. There is a pool of shorts up at 45.34, $243 million. Do they go up to go down to grab these shorts and then drop it like a rock? Because there is that imbalance. Once again, 27.67 billion in long liquidity in all 50x and 100xers down in here on the 1 minute. So looking piping hot to grab that liquidity down below. What is the higher time frame looking like? Let's go ahead and take a look as we expand our vision to the 7-day and change this over to max liquidity. 7-day time frame looks like coming up to that 650 level. There is some billions that is hotter up here to insinuate putting in a higher high as people, the shorts, keep piling on in to fund the journey higher. Of course, there is a band down here at 38,150 that we could spike down into. We went over that theory at the beginning of the week on Tuesday, I believe. And looking at the monthly time frame, you see that there is this large group all the way up to that 45.8 region. Not nearly double digits in liquidity, so I'm not too impressed with the amount that it could generate here. It's only about $20 billion on the monthly. If we go to the 3-month, this will obviously change, so let's go see what that is. It will be double digits only to the tune of 13 billion at 44.8, 13 billion 45 even, 10 billion 45.2, 12 billion 45.4, 11 billion 45.6, 6 billion 45.8, and tapers to 3 from there on out. So the max zone is 45.8 in this upwards range for the shorts. Everything else caked up down below, and sub 34K, really nothing on the way down till there. If we look at the 6-month, not really much. They're drifting on fumes at this point on the 6-month. If we go to the 2-year, the max one, we can see that we are reaching up into the 60 billion at 44.8, 55 billion 45.2. So here's where the $100 billion of liquidity at that 45K region is. If we look up higher, it starts to taper beyond that point. We would have to engineer some more at that 48.8. There's 60 billion up there now. So they're starting to get some liquidity from back then. 75 only changed by $5 billion at that 50,000 mark. Interesting. Let's go back to the monthly and go check out the Momo for the day. Shout out to everyone here. What's up? What's up, Spragadocious? How's it hanging? All right, going into the Binance chart, let's go ahead and take a look how things are. we reached up into that 2 deviation level of the trend base fib from this daily time frame impulse retrace region. From here to here, the math contained within is all up in this projection, and we came to that 44.5 region thus far. Okay, so let's go ahead and throw on the indicator and see what's up. Link in the description for more, of course. Heads up display is on. Scroll down to features, toggle at your leisure, and read about each component as it comes into prominence. The stochastic array, trend cloud, baselines, all of these things. It looks like we are reaching cross down events of some of these oscillators as we taper out here. The daily time frame getting this cross up event that is still going strong. We would have to break down to the 42k below to get this to cross down again. The 3-day also crossing up. We had that potential cross down flash down here, but it did not close, and we said it's on if we are holding this level, which we did from last weekend. And looking at that, it is still holding strong. We'll start from the 3-day and work our way down. So the 3 days looking to double top here on the stochastic oscillators here, and the money flow and RSI in overbought territory could still drift higher as it still gets to that max level here. Even though everything is overbought, we are still in ways before the momentum has shifted the other way now. If we go to the, we have to look at the other indicator A2. Looking at the cloud, it is pointed thick and strong to the upside. Super trend rose up here. It is 15% away to negate. So even if you came down and swept all the way down to 37k, you're still in this bullish trend on the 3-day. At some point, coming back to this Keltner channel though would make sense. We have been trading outside of it for some time now. Generally, when you come outside of this channel, you start to come back into it, come back into it, come back into it. Very rarely do you stay outside and remain outside. So on the 3-day, we are way outside the Keltner channel, so coming back down into it at some point on the 3-day would make sense. If we go to the daily time frame, this is happening here too. Last time we came above the channel here, we kind of held until it came back up to us. So that may be the case here while it comes up and gravitates on this channel. If we look at the cloud here on the daily, it is starting to make a different angle here. Trying to get this just where it's perfect. So does the daily time frame start to taper in a manner here, and we make our way back down into this daily cloud? Daily cloud still pointing to 2 o'clock, have not yet reached that 3 o'clock peak just yet. And the oscillators as well, money flow beneath the RSI starting to come up here, leading MACD formula crossing up since Friday of last week and still opening strong as we push to the upside. Could get a double top here on the stochastic RSI. Are you getting any divergence? Not by the looks of it here. No divergence, so we are still on potentially for a push higher. If we go to the 22, let's go ahead and make our descent. 22 starting to fail the thin boy baseline. Does it can maintain and start to come back down into this channel about 5.7% away? Does all the math for you, so you don't really need to think too deeply about where key levels are. 5% away, and you can do the math accordingly. So 22-hour time frame starting to potentially come back down here. The money flow coming up to the RSI. Do we get this fade on the 22 as we get overbought? The MACD starting to come together. Williams starting to give that impression of an alarm cross at some point. Coming to the 12-hour Williams getting very close together. The MACD still open but starting to taper in a manner here. The money flow beneath the RSI suggesting you could get another push up. This would be in line with the power of threes and that liquidity pool up here. There is still some 100xers to grab before they make their descent on the shorts. So do they make one more stab up before they go down? It is Thursday, December 7th, midweek reversal Thursday as they call it. So you could look for some sort of retrace at some point. Going to the 6-hour, actually we didn't look at the 12-hour cloud and everything, so let's go back to the 12 and come down to the 6 from there. So the 12-hour cloud is starting to taper in a manner here, starting to abate at that 3 o'clock angle, mighty far away, and you're outside this channel here. So the channel coming back down into the channel at 6.6% away. There is a pool down there at 40,538 we went over that we could come down to without a blink of an eye, and it would make sense. So let's go to the 6 now. 6 hours starting to flash the cross down event for the first time since the cross up on Friday. We've had the cross up on Friday and we never have given the downside cross since then. So these cross up events of the baselines here, we had a fake out here on Thursday when we held the cloud and pumped off the cloud, never to go back down. So the 6-hour cross up had you at hello. Does this cross down do the same? We have the price action beneath the baselines, and this is what we look for. This is conversely, as price action closes beneath the baselines, downside begins. This is a formula expressing the fatigue. It's a fatigue on all time frames. It works on all time frames, so seeing it here first on the 6-hour could give that potential. We are getting this flash of the potential cross on the Williams as well. If we're at that flash point as the volume tapers off here, do we start to see a alarm cross and the money flow and the RSI? Which one is the money flow? Let's see. That's one problem, where they're all the same color when they're overbought. So this is the money flow above the RSI. The money flow is slightly higher, so the disparity could bring this down. The MACD looking to cross here, so you could be getting a 6-hour suppressive dump onto the 4 and the hourly here as people look for hourly trades. So let's go down in the time frames to the 4-hour. 4-hour previously had some bearish divergence to cause the staving of the upside event. We're starting to get some flashes of the alarm cross on the Williams. Money flow coming beneath the RSI here for a curveball pitch to the upside before potentially dropping maybe. We have the cross down event of the 4-hour here since basically Wednesday 9 p.m. last night. For the New York Open, we had that cross down event, and we've been seeing the price suppress by that baseline cross. Coming to the lower time frame of the hourly, let's go ahead and take a look. Hourly time frame had that cross down event back here Wednesday morning, and we were talking in the live stream yesterday about stabbing up for a second hit and possibly coming down to this region 1.8% away. Now the math even lines up with the liquidity here. So do we come down to that region at some point? We attempted to come down to it. We hit this wick at 43,395 and bounced off of it and we are starting to come to this hourly cloud. Does the cloud hold us and give us a burst to the upside? The last time we hit the cloud here on Tuesday, we did see a nice mighty burst up. So do we get another burst off of the cloud play, the trend cloud play being here at 43,611. Hourly is oversold on the stochastic, and this is what led me down the path to create this indicator, because I was following a gentleman, you know who, and maybe you don't, but he was a stochastic RSI trader, and I noticed it got suppressed at certain times, and then when did it take off? And then I started to align the different time frames to see how they take off on different occasions versus others. And then I saw how the Williams sometimes suppresses this from takeoff and needs to reset. And so working together with these other momentum indicator tools, money flow, RSI together with the MACD gave me a little bit more confluence to entry, let's say. And yeah, so looking at the hourly here, are we going to get an hourly scalp? We are at the 0 level for the MACD. If the MACD holds this 0 level, it could get a cross up event and burst up here. So the hourly is oversold, but we talked about that 6-hour suppressive play that could occur. So what does that mean for the price action? So let's go back to the 4-hour really quick and see how that actually, we don't need to do that. One thing we can do with Momentum Master that we haven't done in a while, let's do it live on the stream, which is put on the, where is it? The higher time frames and lower time frames stochastic RSI. So we can see here how they interact. So we have this orange level here. This is the 15-minute, sorry, the 30-minute in orange and yellow, and then we have this current time frame in blue and purple, and then the 4-hour here. So as you see on the 4-hour, there is this overbought status which we keep getting suppressed by. The 30-minute wants to take off alongside the hourly here, so this hourly and 30-minute play wants to push us to the upside. Now if we switch, so this is why this suppression could be keeping this from takeoff, because we are in extreme overbought on the 4-hour. If we go to the 15, the 15-minute is getting oversold on the 30-minute, so that 5-minute and the 15-minute play starting to play out here. 30-minute was attempting to push up, but could get this furious dump on the 15 with the suppression here. Let's go ahead and turn off that higher time frame and lower time frame stochastic. And let's go ahead and take a look. So the 15-minute is oversold on the Williams here. You have a double bottom event on the Williams. Does it play out and the MACD down at an oversold level? Do you get a rising sun event up here? The overbought status of the 15 is potentially getting fatigued here on the cloud. This is where we can get into the nitty-gritty. So yesterday we talked about spiking up for a second hit, coming down to here, but it was I believe we were talking about it in this manner here. We were saying that it would come up, hit a cloud, and come down to here, and then possibly spike up a third time and go lower. It was something like that. So let's go ahead and see how that's going to play out. So we already had a spike up, spike down. It didn't go to the exact levels that we were thinking, but now we're coming up here. Do we continue lower only to go back higher and back lower again? It's just all separated by time. So this entire thing is just one big, it's basically doing what we were talking about, but just separated by time here. So this one is actually here to there. So we're batting our head against this super trend slash fair value gap here. There's a fair value gap up in this region slash bearish ordered block. You have these order block inside of Momentum Master. This is another sleeper function that I don't really talk about so much, but we do have an order block finder. So there is a bearish order block up here that we could also be coming back to. This is why we have this sweeping level zone, and looking like we're coming into this bullish order block and buying up here. All right, so yeah, it'd be nice to see it come down and sweep these lows after this wick. The wick has not been recovered yet, so coming down into this wick makes sense to me. They came down and recovered this wick and then leaving another wick here. So coming down into that 43,364 region, there is a lot of liquidity down in this region. 43,364. Let's go ahead and zoom in here. There is a large amount here, $276 million at 43 even. So this long bar, this long noodle over to the right here needs to be slurped up like ramen noodles down here to sweep the lows, and clearing the entire range. $306 million at 42,216. So suggestive to trim your positions because they might be coming for the sell side liquidity here. It would make sense to me for them to come into this region at some point. Okay, so that played out, and we have this sweep 1, 2, 3, 4, 5 kind of coming up here. We will see. So let's go ahead and come back to this in a moment. We have the 15-minute gassing out as we speak. Let's go see what the chat is up to and go into the dollar, yen, and beyond. Oh, what's up, everyone? 44K sell wall is strong. I'm excited to see Bitcoin's strength, though. It is big bearish wall from 44 to 48. We have a break above 48K in order to maintain the uptrend. If we do, Bitcoin is unstoppable. Institutions barely making their way into could continue to climb with the Bitcoin ETF approaching in early January. Is it confirmed that it will be approved in January? I'm not sure I haven't followed that exact news per se. So let's go ahead and take a look at the dominance, Bitcoin dominance. So the dominance reaching into some interesting deviations as we get up into this 55% level. So the dominance of cryptocurrency is dominated by Bitcoin. Over half of Bitcoin dominance here. We were watching this breakout here come above here, and the dominance can rise even in a dump too. And the USDT dominance coming down to a region here as people enter their trades, still consolidating around this region on the daily. If you look at the total three kind of bursting up, but people trimming their positions. People are frugal on the altcoin game as the dominance for Bitcoin is stronger. So we aren't making this entire surge above the range here. It looks like we wicked into this region here. Yeah, this little area over here. So we wicked into that. People trimmed down their altcoin positions. Let's go take a look at what's hot. We have HNT. This is Helium having some, and also BTT BitTorrent. Interesting. Beam, what is this? I don't know, but seeing a rise here. WeMix, XEC, ADA seeing a little bit of a rise up, and Clay. What is Clayton? Interesting. MNT, Mantle, interesting, and GRT, the graph. So those are the ones for the day. On the week, you have Ordi and BTT, BitTorrent, Lunacy seeing some gains near HNT, and that is the altcoin game. And let's look at Ethereum, and then we will go into that. So Ethereum got a bit of a surge up here, some more. We came into this 2301 level, basically a daily resistance slash support zone. If we take the impulse retrace idea here on the trend-based fibs from the bottom here, we came up to this region, came to here. We're basically at the 1618 deviation of that, 2308, and then we are at the bullish trend-based fib levels for Ethereum. Looking at gold, what is gold up to? Gold got some massive surge up into the 2153 region. We were looking at it at the 236 down there and below. I'll clean it up later. Looking at Dixie, slowly making an ascent off the rocket and the 618 bounce over here of the impulse retrace idea. Here on dollar, there's this bearish trend-based fib level that we have yet to break here at the 786 706 region, which is why we are leaving it up, so we could butt our heads up against this and continue further down. So watch for this region here at the 104395 region. What do we do up in this realm? For the Dixie, Nasdaq had a little bit of a rip to the downside. We caught some of that yesterday in the Discord. We still have some levels that we could be coming down into and bouncing out of. We are still kind of bullish until we break certain levels. We have some zones here to look at, different support structures that we bounced off of previously that we could double bottom at. There is a wick to recover here that we have yet to recover at 726. So we could be retracing down into here and giving the impression of a 786 bounce right here, which would ultimately fail and go lower. And yeah, that's about it for some Asia analysis. The 6-hour cross down event is what we're looking at here. Do we reach into some of these bearish order blocks and come lower? Do we come up to here to go down to here on midweek reversal? This would make sense in the power of threes theory, hitting the highs 3 times idea, basically, that we were outlining yesterday. So the second hit came yesterday evening during New York. First hit was here, and where shall you see the other third hit? That is the question, indeed. So coming down into this region, there's the liquidity pools to suggest it at 43K, and you know where the rest awaits us. Do you have anything you'd like me to look at? I think I wrapped BTC in a nutshell pretty nicely. So even if we see this bounce off the hourly, watch to see if we break down at the cloud. And it might not just be the straight shot thing, it might be a breakdown at the cloud like this, you know, like an ABC, and then the cloud starts to taper on the hourly like this. And then we come up and retest the order block and then go lower. Something like that, you know. Ultimately, your confirmation one would be more in that region. Recovery of a fair value gap that would appear in here with the order block theory. So that is Bitcoin in a nutshell. Any other ideas you want me to look at? Let's go ahead and take a look. Can we look at algo? Damn thing barely moves. So if I remember correctly, so it's like barcoding hardcore. First, we're gonna turn off the oscillators and get some key levels. So this is the process that I do off stream as well. While other people are looking for levels to the right, like it's gonna go here, we're looking to the left to see where it's going to abate first. So we start to draw some daily support and resistance levels. We have a wick here that daily levels hit against twice, so that 17-cent region looks to be a zone. And then we also have something down here, which also we got some speed through, which we're butting our head, we wicked into already. So this entire region over here is kind of like a area of interest, if you will, a draw on liquidity, whatever you want to call it. If we want to even put some stuff up in here, we have some stuff over here for potential recovery regions. Another wick over here. And that entire region over here at some point could be an interesting thing to witness. If we go into some lower time frames here, we start to construct a narrative of where it traded fairly or not, and it came back into that fair value gap recovery region over here. There's 3 candles. That is a fair value gap. On the 12-hour, we're going to go back and replay and try to get some actual fair value gaps on some lower time frames like the 15-minute and below. Okay, so we have a kind of wick up in this region at 1637. This is a nice little fair value gap range, basically until here. So that is a kind of interesting point here to note at 1637-ish. That may not be too far away from where we are now, though. Let's go back to where we are now. We're already having a surge up. Interesting. Let's go ahead and turn on the algo, and let's go see where the liquidity is on algo. Whoa, what the let's do algo here. Say what? It's still showing Bitcoin, but I typed algo. That's weird. Oh, maybe I need to reload it. Pardon me, just a second. technical difficulties. Let's see. Algo. There we go. All right, so overall you got 750. Wait. This is not max liquidity. Max, you got to max it out. So we got 22 million in long liquidity imbalance. We've been going and chewing up positions on either side, as the exchanges most likely can manipulate to grab. If you want to see where liquidations are, you can go to coinglass.com/liquidation data. They can tell you where people have been liquidated and what. There was a 2.6k. You can see everything, all of these ordi, people trading ordi. So a lot of ordi liquidations. So they're using people's gambling idea to the exchange to give pipe dreams to manipulate and grab people's liquidity. So be careful of the altcoins. They are easily manipulated by the exchanges. There's a reason why Binance is facing charges, why FTX imploded. These exchanges are just as shady as the what's the word, SEC. They're not better just because they're alternatives. So be careful trading the alts. The alts are easily manipulated. One way you can go into that, see what the average volume is. Average volume 72 million, 4 million. It just tells you how little it takes to push a candle up in some unsuspecting 2K person's face to just say, cha-ching, thanks for playing, insert coin again. So I'm just giving a disclaimer as to how easy you can see how many people, and a lot of them are altcoin people. 84k on Sol, 206k on ETH, 112 on Bitcoin. So there's more liquidations on the altcoin game as people try to convince themselves of moon fantasy dreams. So be very, very careful. That's why it's barcoding more than Bitcoin. It's easily manipulated. Okay, oscillator on. Disclaimer, inbound. So we had this nuke lock-in on the hourly time frame. The previous hourly lock-in on Sunday did play out a little bit. We're seeing this surge up on Sunday. This was 2 Sundays ago, okay. And then we had the Monday sell-off into that little burst at $1,000 take profit on Bitcoin from 45k, caused all the alts to reset. And now we're getting a burst off of this cloud on the hourly. So if we go to the 4-hour time frame, four-hour is still possibly going higher. Once again, we have to be aware of what Bitcoin is doing, and you have this cross down event of the 6-hour here. If we spike up into these fair value gaps, if you're in a long, this might be a position to think about taking profit if we continue. One way to see the continuation idea would be, we had a nice rocket ship lock in there October 19th and play out quite nicely for algo. Let's see what, there's not a clean impulse though. There's a lot of wick whacking. It's a very volatile, choppy thing that finally broke out from Thursday of last week. Okay, so sorry, I'm trying to make sense of it. Every asset has their own personality, you know what I mean? Like it has its own key levels, its own drama, and you have to step out of the Bitcoin mindset of conviction because it doesn't always do that. So if we go to the trend-based fib and we just look at a daily time frame and say, okay, we came up to a point here, let's say on Monday, November 20th, came all the way down here on the daily time frame to the 12-cent level. Your 236 is the 1379 region. This 236 held, we burst up. Now this lines up with the 706 trap door up here at the 1675 and the 786 clearing this entire fair value gap. So do we start to make it our way up into here and start to chop around in the fair value gap and then make our way back down? There's a lot of confluence in this region here, mathematically, and on this impulse retrace on the daily. Now there's a lot of impulse retraces within that. Why did I choose this one? Well, this was the absolute max, and then we came down significantly from there and held for an entire day. It wasn't a buyback wick, so I didn't count this one. So that is where the logic lies for that, but that lines up with the math here for algo. So I'd be looking to maintain your long, perhaps, to see if it comes up to that 1725 region. Even though the 6 hour is crossed down, the 12 hour still has some legs. 4 hour starting to pump here. You got the super trend on your side, baselines. Baselines looking to possibly cross up. Oops, I want to delete that box, but I'll do it after. So yeah, that's algo in a nutshell. Going to the upside, perhaps to these levels, watching to see if it gets a trapdoor effect at that 706 region, at that 1675. There's another fair value gap we're coming up to here, and that's Algorand. You got that alert to your phone, 3 time frames oversold, boom, and now we're starting to burst up above the range, starting to come back above some highs. Can we put in a higher high and break this into this fair value gap area? If you entered that, congratulations, you know where to move your stops into profit. You can go to these lower time frames, zoom in, and see all of the goodness here from the cross up of the baseline 7. You're at hello to all of the volume entering currently. Yeah, so that's algo in a nutshell. Method to the madness, hopefully understood. There you go. No need for patterns. It's all liquidity based anyway. It's a game of traps. So just know where the traps are sprung and trade accordingly. All right. Anything else? Super in depth. Thank you. Nice. So yeah, coming up to here and possibly chilling out and then maybe coming lower. Who knows? But when I'm in longs, like let's say hypothetically I entered a long on algo. Let's just say I bounced off of the cloud here. I took a long. I saw it held the 236 and surged up here. I would look to trim at the 6.5, and then I would basically move my stop up. If it bursts up to that 786, I'd put my stop beneath the 6.5 and just see where it goes. If it does go higher like that, then so be it, but my stop will be beneath a certain range, and generally I use Fibonacci. I'll show you how I came across this trend-based fib idea and how accurate it was on a trade that I took at one time for what's it called, Sol, back in the day. So let's go back in the day to Sol. We're going to go back in time over here when I was trading patterns. I left it on there as a way to show how these work. So I was looking at this from September and October as Bitcoin was making a upside play. It was a different iteration of the matrix for myself. I did not have my indicator here. Probably would have been able to see a lot more clearly if I had it. But I was still looking at rounded out bottoms and shoulder, head and shoulder, and these continuation ideas. So anyway, what did I do? Well, we had this impulse and retrace idea here. And this was where we came, impulse, retrace. Hi, yokai. And so this impulse retrace, this trend-based fib idea I put in, and then it projected this math. Wonderful, right? And so I was looking at potentially coming up into these regions if we were to break out. So I had a trade open and I had a risk stop loss down in this region here. And sure enough, check it out. So it did this thing where it comes up to the 6.5, kind of butts its head up against it, and then so I was like trimming up here. Then it came up to that 706. I was looking for like permission granted to go higher. It did, and then I started to trim my position up in this take profit region, moving my stops up, and then it maintained at the 706 or 786 and continued to the deviations higher. And yeah, that's why I was able to take it up to this level. But yeah, that's why I use these trend-based fib values here for the 6.5, 706. Generally, if there's too many over-leveraged people, they'll dump it in their face and say try again. But if there's just enough people that aren't getting paid, then they'll send it higher into the shorts. And that was for Sol back in the day. So that's my story, and I'm sticking to it. For Bitcoin, do we see a pump? You have two possible rejection levels. You have a ABC to the downside from here, or a third hit to the high / rejection level down to these liquidity zones here. Ultimately, would be nice to see a retrace into some of this long liquidity on, we were talking about, to the tune of $28 billion in long liquidity to the downside. I have no problem telling you where the imbalance is. I don't need to be on team bull or bear, just looking at the liquidity every time. And yeah, that's where it looks like it could be going for Thursday, December 7th, midweek reversal, coming into some of these over leveraged longs down here at that 43k region. 276 million at 43 even, 43.67 we have it marked off here. So that would be a area to watch. You'll be able to see it on the cloud first. The cloud will start to shift because it's volumetric in nature, so you'd see this kind of breakdown to that region somewhere around New York. Do we have any New York news? Let's go ahead and take a look at that. We had some last night. Looks like we have unemployment claims, so that'll give you a little bit of volatility tonight. And that is my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision,